Welcome to another video of Wisemen, traders mentoring the eager to become wise. Please hit that subscription button so you can be up to date with all of our content. I'm Johnny Margarito. Please note that I am not a financial advisor yet. In this video, we're going to be talking about stock market 101, all the basics. I'm going to be talking about what is a stock, how you gain and lose money while investing, what is the stock market. I'm going to explain the difference between investing and trading, what is an ETF, and I'm also going to give some guidance onto how to build a portfolio. So this one should be a good one for beginners. All these stock market 101 videos are going to be perfect for beginners. So make sure you subscribe so you don't miss none of these videos, guys. So let's talk about what is a stock. A stock is an investment that represents a share or a partial ownership of a company. So basically, a share is a piece of a company. You actually own a little small piece of this company. That's what a share is. Now I want you guys to know a share and a stock are the same thing. Now the purpose why companies issue shares is so that they could raise capital so they could move forward with the business for research and development or to keep growing the company, to put it as simple as possible. Now let's talk about what is a stock market. A stock market or equity market is a public entity for trading of a company's stock. So companies have to file an IPO so their stock could be traded on a public stock market, which is the NYC, which is the NASDAQ. We got the Dow Jones and the S&P 500 are the top three for the USA. So to put it as simple as possible, the stock market is a public entity that allows companies to enlist the shares so that us as retail investors could buy it at an agreed upon price. So now let's talk about how you gain and lose money while investing. So let's say you buy 10 shares, 10 stocks that are worth $10 each. That would have a total value of $100. So for example, if the stock loses 10%, the stock would now be worth $9 each because a whole dollar would be lost. That's 10% of the stock. So if it were to go down 10%, your account value would be $90 for that position right there. That's how you would lose money. Let's say the stock gains 10%, so it goes up to $11 per share. Now your total account value would be $110 because you have 10 of them still and they're worth $11 each now. So now they're worth 110 is your total value. Okay, but let's say if you bought the stock and it goes down right away, it goes down to 10%, so you're at $90 now for that initial $100 investment. You don't lose that $10 until you actually sell those stocks. You could keep holding on to those shares, so if it would actually gain value past the $10 which you initially bought it at, let's say it dips to 9 and then it goes back up, passes your 10 and goes to the 11 like this other example, you're back at $110. So you never lost the $10. You held strong and now you're up again. So you only lose and gain when you truly sell the stock, but you could hold it on to however long you want to. So remember that you don't lose or gain money until you actually sell it. Okay? And the percentage amount is always going to be the same no matter how many shares you own. So if you would own 100 of them, so that would be a value of 1,000. If the stocks would drop that 10%, it would go down to $900. If they would gain 10%, your account value would be $111. So the percentage is always going to be the same. So now let's talk about investing and trading, because those are two completely different things. Now I use Public for investing and Webull for trading because they have an outstanding view of the market, and they also have a paper trading feature so you could trade with fake money, so that's extremely helpful. And Public is a great app for beginners and in general. It's so user friendly, it's great. So I'm gonna post the links to both Public and Webull So you guys could download them and try both of them out. I highly recommend both of those apps. So let's get into investing and trading. So investing means owning an asset, in this case a stock, for a goal of generating an income from the investment or the appreciation of your investment, which is an increase in the value of the asset over a period of time. So technically that period of time is a year plus. It could be a year through 30. So it's technically anything over a year is considered investing. So when you're investing, you gotta do your due diligence on the company or the sector you're considering investing into, because of course it's going to be over a long period of time, so you want to know if that's going to be growing. Now trading is looking to generate a quick profit. Trading consists of buying and selling your stocks in hopes to generate a faster profit. So there's different styles of trading. There's day trading, which people try to sculpt a certain amount of percentage off of a daily mover, a stock that's moving crazy that day. But that is extremely dangerous to do. I don't recommend that for beginners. Swing trading is when you buy a stock at a low price in hopes to sell it at a greater value another day, which could be the next day or a couple days, a couple weeks. But I recommend practicing on a platform like Webull first. So of course, always do your homework. When it comes to long-term investing, you must evaluate a company. Now I have a video on how to evaluate a company. I'll put it in the description. You must believe in their CEO and they must have a good product for you to invest into them. And you must be aware of the news and upcoming events. There's a lot to factor in when you're considering investing into a company, because you plan to leave your money in there for a long period of time. So you really have to do your homework. And when it comes to trading, I recommend practicing first with Webull or Thinkorswim, but to find a good strategy. And you have to learn about trends, charts, and when to sell around or buy around events, and have a goal percentage that you're strict on. Now let's talk about what is an ETF. An ETF is an exchange traded fund, which is a basket full of securities that is traded like a stock. So basically, an ETF is a bundle, a basket full of stocks, which track an index, which is like the S&P 500 or the Nasdaq, a whole market. Sometimes a specific sector like commodities, like tech, renewable energy, and so forth. There's also some that are actively managed, so people actually are always changing the holdings within the ETF. There's also some for foreign markets, so you could track Japan's or China's markets and so forth. So ETFs help you become diversified by just buying one asset. So like this one in the picture, for example, you could buy a bundle like this is either VOO or SPY, the SPDR that tracks the S&P 500. So ETFs are perfect for beginners that don't know how to build their own portfolio or choose their own individual stocks, because that's what investing is building your own portfolio of individual stocks. But sometimes we'd like to track sectors and the whole market. But ETFs are perfect for people who don't know how to pick individual stocks yet, that they could get a good basket full of good sectors or markets that could actually perform well. And because this is how it looks as a beginning investor when you're first searching for an individual stock, when you get to be picking up some ETFs. And ETFs actually perform pretty well. Like the S&P 500 SPY averages 9.3% annually, which is very great. Now ETFs usually cost a few $100s per ETF per share. So I highly recommend a brokerage where you could buy fractional shares, which means you could buy $1, $5 into it instead of buying complete shares of it. So that's very helpful when it comes to ETFs and these big blue chip stocks like these ones listed. Like Amazon costs 3,000. That's pretty rough to pick up per share, but on an app like Public, you could buy fractional shares, so you could buy just a piece of it instead of the full amount, which is very helpful. So let's talk about building your portfolio. You really have to study for hours if you're going to be choosing individual companies, because you really have to evaluate them and dig deep into those companies. So as a beginner, I highly recommend sticking to ETFs. You could track the S&P 500, the top 3 US markets, let's say, and also you could track like your favorite sectors that you think will perform well during 2021 through this year or through the next 10 years, let's say. Get some ETFs to track specific sectors that you think they're going to perform very well over the next years. So build your portfolio around some great ETFs that track the S&P 500 and probably the top 3 US markets. And then you want to find some that are going to be tracking some top sectors like renewable energy, tech, um, your favorite sectors you should be sticking to until you learn how to evaluate companies, because you really have to do a lot of homework when investing into an individual stock, because really have to have faith in that company. As an ETF, you could just you can have faith in the whole sector. You could be diversified by just owning one asset. So it really does take time to learn about the stock market and to just learn about the language in general. It takes a long time. So I highly recommend sticking to ETFs, and I have a video to learn how to evaluate a company. The stock market is so helpful, and it could really bring financial freedom into your future. So I highly recommend investing, especially young, old, it doesn't matter. Investing is so helpful and so beneficial for our future. So keep studying, keep learning about the stock market. This is so important to learn about, guys. So like and subscribe to my channel, because I'm gonna be dropping more of these stock market 101s and also some other good videos that you can learn about. And I also have a blog at wisementraders.org where I have a list of my favorite ETFs, and I post some good watch lists all the time. So check it out, and let's keep earning and growing together, guys.